Let us move to the second example. In this example, Rohan paid $200 for 8-month liability insurance with begin coverage on June 1st. So June 1st. Okay. So what happened is we pay for the insurance and the insurance gives us benefit coverage for 8 months. So this 200 is for 8 months. For 8 months. So I can guess that for every month the expenses will be $25. That is 200 divided by 8 months. Am I right? So now that June is over, we need to remove the cost of 1 month insurance from these accounts because we paid for 8 months. We already use 1 month insurance. So we need to take up the prepaid insurance. The prepaid insurance is the assets. Yeah. Prepaid insurance is assets. The amount of money that we pay in advance. So that is our asset. It will give us benefit in the future. So to take out the money, okay, if you divide 200 with 8, this gives you $25 per month. So since you already used $25 from this prepaid insurance assets 200, you need to minus 25. That's why I'm going to credit. That's why I credited $25 from my prepaid insurance. This is increase, this is decrease. So now that the balance of the prepaid insurance is only 175. That is for 7 months. Okay. Let me repeat again. We paid $200 for 8 months prepaid insurance. Okay. And after 1 month, we already use 1 month of the insurance. Yeah, that is our expense. So the balance of our prepaid insurance should not be 175. If you want to record in your balance sheet, you should not record it as 200 because 25 is already used for month of June. So the balance now should be 200 minus 25. So minus 25 is credit $25 from your to your prepaid insurance
Professor,
accounts.
so the entry over here will be insurance expense debit and prepaid insurance credit.
Yes, correct. So
Okay.
that $25 will be our June expense, our prepaid insurance expense for month of June, $25. So I'm going to reduce my prepaid insurance and I'm going to increase my insurance expense. So insurance expense is debited for $25 to recognize the amount expired coverage for month of June. So this is our expense. From 200, 25 is expense, 175 is prepaid assets, prepaid insurance. So this is your expense. Next month, you're going to use another $25. So your total expense, insurance expense increase from 25 to 50. Your insurance prepaid will reduce from 200 to 175 and then to 150. So the journal entry will be debit insurance expense by $25, credit prepaid insurance by $25. So this is the T account. This is the journal entries, and below are the three
Professor,
T accounts. Yes,
so insurance expense will come in the statement of profit and loss account, right? Only
yes,
25 or 200.
25.
Okay. And this
So
200 will go in the balance sheet.
no, not 200, 175.
Oh yeah, yeah, 175. Sorry. Yeah.
175. This one
Yeah.
will go to our balance sheet. Our
Okay.
balance sheet, and this 25 here will go to our income statement. If you don't do the adjustment, what happen is all the 200 will go to the balance sheet, which is wrong. Yeah, 25 should go to income statement as insurance expense, and the balance of prepaid insurance in the balance sheet should not be 200. It should be 175. Okay. The next one, wages expense. Okay. Rohan paid his part-time employees 650 on June 27. Okay, he paid by cash 650. They have earned an additional $50 but have not yet been paid. We don't pay the $50. Maybe from 28 or 29 they work for another 2 days and they should entitle for another $50. But you don't make the payment. Maybe you pay every Friday. Okay. So the 650 does not include all wages earned by employees during June. It should include additional $50, unpaid wages $50. So the correct figure for your wages expense should not be 650. It should be 700. 650 plus 50. Even though you don't pay the 50, but the true value for your wages expense is 700. So in that context, you need to adjust your wages expense. You need to debit another $50. So that's why on 30th June, we should record it as $50 debit. And I'm putting the items here, wages payable. This is your liability. Wages payable $50. A $50 debit to wages expense for the additional wages earned during the month of June. So this is 50, and that 50 is not cash, it's your liability. So I'm going to record here wages payable. This is your liability, $50. $50. So credit wages payable. Credit wages payable. So the journal entry will be debit wages expense $50, credit wages payable $50. So your expense increase and your liability also increase. Okay, if you still remember, we have this formula that we did a lot last week. Asset, expend, and drawing increase debit, decrease credit. For capital, liability, and revenue, increase credit, decrease debit. Something happened to my system, yeah? So in that case, it's going to be debit, wages expend, credit, wages payable by 50. So this is your wages expend. You can see 50, and wages payable, I'm going to credit by 50. So your total wages expend that going to report in your income statement will go to your income statement is not 650, but your expense is 700. And in your balance sheet, you have a liability of $50. That is wages payable. Wages payable.
Professor, can you explain that again?
Okay, sure.
That income and the balance sheet only.
Income and the balance sheet. Okay. Every month or every year, you're going to prepare these three documents. All right. Income statement, statement of changes in equity, and balance sheet. All right. Balance sheet. Balance sheet. Okay. Your income statement consists of revenue and expense. Your balance sheet consists of asset, liability, and equity. Your wages expense is your expense, go to your income statement. You recorded 650, but that value is not correct. That 650 value is not correct. Why? Because there is another amount of wages amounted $50 not paid to the employee. That $50 is expenses for month of June. So you should record that in your account. So the correct value for the wages expense is 700. That is the reason why we need to debit your wages expense by another 50. That's why that is the reason
So,
why we
Professor,
need to add the wages expense by 50. So by doing that, your total wages expense is 700. So this expense will go to your income statement. The 700 will go to your income statement. Okay. If you don't do this adjustment, you will not have liability, which is not correct. You have liability. Your business has liability to its employee. They have given their service to the business, so you should pay them $50. So that amount of liability or payable must be recorded, must be reported in the balance sheet. So that wages payable will go under your liability. Will go under your liability. Please, any other question? I'm happy to answer all the questions to clarify the thing because this is very important for every one of you. No? No questions? Let me check the chat box, yeah? Yeah. Okay, Alhamdulillah, yeah. Seems like everyone is can follow it very well, yeah? Okay. So this is your wages payable. Let me move to the next adjustment. That is for revenue received in advance or prepaid revenue. What does it mean? Okay. This is just modification example given by me. Yeah, it's not available in the original slide. On 1st June, Rohan received a payment of 900 from his customer for delivery service for month of June, July, and August. So that we have one customer came to our office maybe to ask us deliver certain thing for this 3 month period, and our customer gave us $900. We don't provide the service yet, but this guy came to our office. This is $900. I want you to deliver the pamphlets every week, for example. So how are you going to record that? Certainly you're going to debit your cash increase, but that is not your revenue yet because you provide, have not provide the service to the customer yet. You don't send, so you don't deliver the pamphlet yet. Okay. So that will go to debit, cash, credit, delivery revenue received in advance. It's very long. Or you can use prepaid revenue, shorter, am I right? Prepaid revenue. That is your liability. What happened?
Professor,
After 2 days, the customer came to your office and say, we would like to cancel the job. I want my money back. You don't provide the service, but they want to cancel the job. Maybe you have to pay maybe 90%. Maybe you have to pay all the money back to your customer. That's why it fall under liability. It fall under liability. Or you can put as accrued income. Yes, accrued income. Yes, that is another term that you can use. Okay, we are flexible on that as long as you can understand. So this is your liability. So this is your liability until you perform the service, it become your revenue. So at the end of the month, we need to do some adjustment to our prepaid revenue or accrued revenue, whereby we should recognize $300 that is one third for 1 month as our delivery service revenue. This is for 900 is for 3 months. So this is for June, July, and August. So we delivered the service for month of July. We performed the service. So from the 900, we should record the 300 in our revenue or income account. So this is our revenue, 300. Whereas the 600 still considered as accrued revenue or still our liability. So how are we going to do that? This is our liability account. Liability increase on the credit side, decrease on the debit side. Okay, and our revenue accounts, we have a revenue, same, increase on the credit side, decrease on the debit side. So I'm going to recognize 300 as my revenue. So if you have other revenue before this, it might be on the top. No worries about that. So what I need to do is on 30th June, delivery delivery revenue received in advance, or accrued revenue, or prepaid revenue 300. So your revenue will increase. Yeah, revenue will increase, and your liability will reduce by debiting that account. You're going to debit your accrued revenue or delivery revenue received in advance, or you can put here accrued revenue or revenue prepaid. Okay, that is by debiting 300 from the liability account. So now your balance will be 600. Your balance will be 600. Okay, let me repeat again. So in certain instances, there might be possibility that you receive very good customer. They came to your office, give you a sum of money, maybe 900 in this example. Yeah, asking you to deliver certain thing maybe for every weeks, maybe brochures or pamphlet every weeks for 3 months. That is for June, July, and August. So you receive the payment, so you record it in your account, cash debit 900, but that is not your revenue yet. You cannot record as your revenue. Why? Because you have not given or performed the service yet. So you're going to put as your accrued revenue or prepaid revenue. Okay. So in that case,
Professor,
you're going to
I have a doubt.
credit 900. Yes, Devanshi.
Professor, so this 300 will come in this statement of profit and loss as expense, and the remaining 600 will come in the balance sheet.
Now, the 300 will go to your income statement as revenue.
Sorry. Yeah,
Revenue.
correct.
Yeah?
Revenue.
As
Yeah,
revenue.
revenue. Yeah.
The 600 will go to your balance sheet as
Unaccrued income.
accrued income. It fall under asset, liability, or equity.
Assets.
No.
Okay, it's a liability. Correct. It's a
Liability. Yes,
liability. Yeah,
correct.
liability.
Yes, it's liability. Why liability? Because it's not yours yet.
We have to provide the service yet, so that's a
Then become
liability.
yours. Yeah. Okay. Okay. So that's good. That's very good. Yeah, that's very good. So the 300 will go in your income statement as your revenue. The 600 will go as your liability. Next month, another 300 will go to your income statement, and the balance 300 will go to your as a liability. And after 3 months, there's no liability. All the 900 will go to your income statement, yeah, as revenue. So this is the adjustment that you need to do, yeah. So for month of June, okay, we have June, July, and August. Okay, for this, so I assume that you should recognize revenue by one third, one third, one third from the 900. So for the month of June, you should recognize 300 as your revenue. 300 as your revenue. So we are going to deduct for every month, our liability will reduce by 300, 300, 300. And for every month, our revenue will increase by 300, 300, and 300. That's very good. Very good. So to increase the revenue, we need to credit our revenue accounts, whereas to reduce our liability, we should debit our liability accounts.